Even billionaires, nangungutang din sila. Mark Zuckerberg finances Palo Alto home at 1% mortgage rate. Beyoncé and Jay-Z mortgaged their 88 million Bel Air mansion. So if these wealthy people who could pay cash easily still choose loan or mortgage, is mortgage the smartest investment move? Or cash is king? That is what we're going to cover in this video, not from a billionaire's point of view, of course, but using an ordinary investor scenario. Imagine this. You've been saving for years and now you finally have 5 million in your account. Sana all. That is a life-changing money. The question is, do you want to put that 5 million cash to pay a condominium unit, or just pay a down payment and let leverage or utang do the heavy lifting? Stay with me, because today we're not just going to run the numbers for 10-20-year returns, we'll also adjust them for inflation so you'll see the true return in real pesos. And at the very end, I will add a twist. What if you split your money using a down payment and invest the remaining in PAG-IBIG MP2 upfront? That is where the real eye-opener happens. But before we dive in, what does your gut tell you? Is it mortgage or cash is king? Hold on to the thought, because the numbers may surprise you. First, let's set our assumptions clearly, because numbers can only make sense when the rules are transparent. Let's say the condo price is 5 million. Acquisition cost, or the cost to buy, is 20% of purchase price, which is broken down into 12% VAT because it's above the 3.6 million threshold. We also use 8% to cover transfer fees and registration fees. In a prime location, we considered higher between the zonal value and the market value, but let's simplify it using 8%. That's a total of 20% acquisition cost including VAT. We also use 5% annual appreciation. Some prime locations are higher, but let's be conservative and use 5%. Rental yield, we also use 7%, or 350,000 gross rent. That's on year one. On year one, cost of 75,000 to cover maintenance, association dues, plus 17,500 property tax, with both costs and rent rising 3% annually. A very optimistic scenario. And lastly, we use rental income tax of 10% for simplicity. For the mortgage option, the terms will be 20% down payment of 1 million with 4 million loan at 6% for 10 years. And if you stay till the end, we'll also use inflation of 3% annually to calculate the real returns. So let's start with option 1. Buy the property with 5 million cash. Paying in full requires about 6 million upfront if you add the 1 million acquisition cost for VAT and fees. With 5% annual appreciation of the property, your condo grows to 8.14 million in value. In 10 years, 10.39 million. In 15 years, that's 13.27 million in 20 years. The great thing about cash buy, every peso is tied up on day one and there's no mortgage top-up pressure, giving steady positive cash flow from year one. That gives you a net operating income starting at 232,000 and rises roughly to 460,000 by year 20, producing 6.23 million in cumulative rental income. So if you include the condo appreciation of 5%, your wealth is now 10.8 million in year 10, 14.7 million in year 15, and 19.5 million in year 20. That's also an investment rate of return before inflation of about 7% across 10, 15, and 20 years. Now, what if you buy the condo with mortgage instead? Let's find out if using leverage or utang will work better in your favor as an investor. In this case, the picture will be different. You put 1 million down and pay about 1 million in taxes and fees. So same initial cash outlay of 2 million pesos. And then you go out to the bank and take a mortgage of 4 million at 6% for 10 years. So while the mortgage is running with principal and interest, you also collect rent, but the rent income doesn't fully cover the loan payments. Here's the breakdown. rental income of 350,000 in year 1 less annual loan payment of 532,000 and maintenance costs and taxes of 118,000. Therefore, you have a shortfall of 300,000 in year 1 that you need to pay from your own savings. The good news is that as rent and costs rise with inflation, the yearly shortfall gradually shrinks to about 230,000 by year 10, but you still need to inject cash each year, and over 10 years, these yearly top-ups total about 2.7 million. So adding the initial cash outlay of 2 million for down payment plus fees to 2.7 million mortgage top-up gives you a total cash investments of about 4.7 million. Remember, with cash buy, you invested 6 million on day 1, while with mortgage, your investment is only 4.7 million with 2.7 million spread over 10 years. So with this mortgage option, it changes the outflow, but the condo is still worth 5 million, appreciating 5%. But why in this table, the mortgage option's investment rate of return is higher at more than 9% than 7% for cash? This is because you invested 1.3 million less, even though the final condo value is exactly the same for both options. Therefore, the mortgage option is a smarter use of cash. And this also means that your condo grows at 5% annually and yung rent income mo tumataas, but your mortgage loan, the outstanding balance is going down, leading to declining interest that you need to pay. And on top of that, by year 10, sayo na yung condo because you already paid off the loan. So from year 11 onwards, all of your rent income is yours. The key is that appreciation and rent growth, in this case, assuming your condo is in a very high in-demand prime location, is making every peso invested work harder. This also proves the power of leverage or using utang wisely to build wealth. Now, let's sweeten the deal with the third option, mortgage with an MP2 twist. The assumption is that you still have the 5 million cash, but you went for the mortgage option and took a 4 million loan from the bank, same as option 2. Your initial cash outlay is also 2 million to cover down payment and acquisition costs. But in this scenario, instead na matulog yung natitirang 1.3 million mo sa bangko, you invested the entire amount in MP2 instead. Over 20 years, that 1.3 million grows to 5.15 million. So combining that with the rental income from condo, here's the breakdown. Your total investment value would be 13.4 million at year 10, 18.4 million at year 15, and 24.7 million at year 20. You can see that option 3 makes you 5.2 million richer than the other two cash and mortgage options of 19.5 million, thanks to compounding MP2 investment on the side. This proves that putting your eggs in one basket may not be the smartest move to get more eggs. Now, how about the real returns taking into account inflation? Because nominal returns can look strong, but 5 million in 20 years from now won't buy what they do today. So at 3% annual inflation, we deflate each outcome to reveal the true purchasing power. Here's how the numbers look like. With option 1, cash buy, all your 6 million is tied up on day 1 with 5% nominal appreciation and 7% rent yield. After inflation, you end up with 10.8 million real wealth in 20 years. With option 2, which is mortgage only, despite only paying 4.7 million of your cash for down payment, taxes, and fees and top-ups, your condo property creates the same real wealth of 10.8 million. Because the condo's growth is, of course, independent from financing. The smaller cash base drives a higher real investment rate of return of 5.3%, making mortgage the most efficient return on peso invested. Lastly, option 3, mortgage with an MP2 twist. You still get the same condo growth plus 1.3 million MP2 compounding at 4% real return. This combination builds the biggest absolute real wealth of 13.7 million by year 20, though the blended investment rate of return of 4.1%, which is slightly lower than the mortgage option, just because more cash of 6 million invested covers condo down payment and mortgage top-ups. So if your goal is maximum percentage return on each peso, then mortgage wins. But If your goal is to maximize wealth or splitting your money upfront in two investment engines, like investing in both Condo and MP2 is the most powerful strategy. I also made a separate video comparing REITs versus Condo, the ultimate real estate showdown. So click here to watch it. And don't forget to hit subscribe so you won't miss brand new videos coming up.